Thank you for joining our webinar this morning, our export operations webinar this morning. Today we're joined by Ella Paskett from White and Black, who are one of our FDEA service provider members. And she is going to be talking in a bit more detail about the new EU legislation on deforestation and what that's going to mean for exporters. The webinar is being recorded, so we'll send around the recording after we've left the call. If you do have any questions for Ella, please feel free to pop them in the chat box as we go along, or ask some questions at the end of the webinar. Ella, I'm going to hand over to you.
Thanks, Mel. Hi, everyone. I'm going to do my best to get through as much as we can today. If any of you have experienced or have tried to read this this regulation, it's quite a chunky document. So let's see how much we can get through. And any questions at the end, as Mel said, please do let me know. I'm putting my email in the slides. So if there's anything that you think of after the presentation, then feel free to drop me an email. And I'll be sending around the slides after the webinar. So let's just share my screen. Right, so let's get started. So the EU deforestation free regulation, it's been shortened to the EUDR, and I'm going to try and cover today the objective of the regulation and the scope, so how it affects everyone on this call, if at all, the obligations and checks and sanctions, and then at the end, how you can best prepare for the regulation. So we have a little bit of picture painting here. So in the last 10 years alone, we've lost our primary forests at an alarming rate of around 4 million hectares per year. So this and these other points are why there is a need for the EUDR. The EU is the second largest importer of agricultural goods linked to tropical deforestation, right after China. The EU's imports account for 36% of deforestation linked to crop products and over 25% of deforestation linked to ruminant livestock products and their equivalents. So enter the EUDR. This replaces the EU timber regulations. So that's just something to bear in mind, that if you're aware of the requirements under the EU timber regulations, this new regulation will be replacing that. So the objective of the EUDR is part of a wider EU commitment to tackle deforestation and forest degradation and combat the environmental and social challenges posed by deforestation. So it aims to promote the consumption of deforestation-free products and reduce the EU's impact on global deforestation and forest degradation by mitigating biodiversity loss, climate change, and violations of human rights. In doing so, it's expected to reduce carbon emissions and greenhouse gas emissions and global biodiversity loss. The hope is that it will reduce the emissions by at least 32 million metric tons a year. But we will wait and see whether or not that is indeed the case. But it's also important that environmental due diligence is really embedded into the way that everyone does business. Otherwise, so that we can hopefully enjoy a more sustainable future, and also spur other nations on to kind of implement their own regulations as well. So the EU is sort of leading the race on this. So I've got a timeline up here, so you can see that there are, I guess actually maybe first I should mention that with EU regulations, there's a period between the regulation coming into force and its actual application. So this period should allow businesses and enforcement bodies the kind of time to prepare for the requirements that they'll be that they'll need to comply with. So on the 29th of June 2023, last year, the EUDR came into force. There is still time because it's not until the 30th of December this year that the regulation will apply for large and medium-sized undertakings, and it's been extended on the understanding that it would be more difficult for small and micro-sized enterprises to kind of get into compliance. So if you're counted as small or micro-sized, then the regulation won't apply until the 30th of June 2025. We do recommend, though, that anybody affected start preparing now to ensure that you're compliant when the time comes. And with any systems that you implement, there will be a certain amount of flexibility required, as this regulation is going to be reviewed every 5 years. And it might be that new commodities, new products are caught under the regulation, or new types of environment as well. So it's good to kind of keep updated on this as we go forward. So on the slide now is the scope of the regulation. So these are some of the relevant commodities and products that fall underneath the regulation. So I'll just go through a few of them. We have cattle, so this would include leather and meat. Cocoa, which would include cocoa beans, cocoa butter, cocoa powder, and chocolate. What it wouldn't cover is chocolate-coated nuts. To find out if you're in or out of scope, then you look at your harmonized system or HS code, which there's a list in the regulation at Annex 1, which I've linked in this slide, so you can find out whether or not your commodity or product that you're involved with is going to be caught under the regulation. So that would also include oil palms, palm nuts, palm oil derivatives, rubber, perhaps not as relevant to people in the call today. Then soya, soybean, soybean flour, soy oil, and any soy-based animal feed as well will come under there. And then wood, fuel wood, packing cases, furniture, casks, pulp and paper, and printed books. So yeah, as I said before, you'll find a full list of the products that are in scope in Annex 1. And if your product doesn't fall into one of those listed HS codes, then it's not caught by the regulation. So something like coffee cake wouldn't be caught, and gelatin, they're not in scope. I think it's probably also worth mentioning about packaging. So packaging itself isn't caught under the regulation if it is used exclusively as packing material to support, protect, or carry another product that's placed on the market. If you're selling packaging in its own right, then that would get caught under the scope. And if there, I'm not sure if there would be, but if there are any kind of user manuals or sort of printed material, for example, that are included in your sort of shipments, unless they're being purchased in their own right, they also wouldn't be caught under the scope of the regulation. But as I said before, casks and barrels are caught within the scope. So if you're involved in whiskey, for example, then that's something to consider, because along your supply chain, there will be people that are caught if you're involved in the EU market. Probably also relevant is that the EUDR does not apply to goods produced entirely from material that's sort of completed its life cycle and would otherwise have been discarded as waste. So it's not trying to prevent materials that have been made out of recycled products flowing through the market. So now let's go on to who must comply with the regulation. So this is split into two groups. we have operators and we have traders. So according to the regulation, operators are any entity which places relevant products on the EU market or exports them from the EU market. So placing on the market means first making available the relevant product or commodity that we just looked at. And then making available means supplying the relevant product for distribution on the EU market. Distribution, consumption, or use, that's the full definition. So just to give an example, an operator could be a company that imports cocoa butter to be sold to other enterprises or to final consumers that are present in the EU market. Then the other business that will have to comply are traders. So anyone in the supply chain other than the operator, as defined just now, who in the course of a commercial activity makes the relevant products available on the EU market. So an example of a trader could be a company that buys chocolate from an operator based in the EU, and then without transforming it or changing it, distributes it to supermarket chains. It is possible to be both. So if you imagine, for example, we have a coffee company that's importing and selling beans from outside the EU, but is also buying and selling roasted beans from an EU-based roaster. So based on the first commercial activity, where the coffee company is importing and selling the beans from outside the EU, that company would be considered as an operator. But based on the second, which is buying and selling the roasted beans from an EU-based roaster, that would qualify as a trader. So in the next slide, we'll go on to what you need to do if you fall into either or both of these categories. So that's just something to be aware of when you're thinking about how this regulation might be relevant to you, identifying where you fall underneath each of these different categories. So apologies for the wordiness of this slide. But if we start off with the obligations for operators, operators must produce a due diligence statement to demonstrate that the relevant commodities are deforestation free and produced in accordance with the local production country laws that concern the legal status of the area of production in terms of land use rights, environmental protection, third-party rights, labour rights, forest-related regulations, tax, anti-corruption, and relevant trade and customs regulations. Bit of a mouthful there. So SME operators, so for small or micro organizations, operators can make a reference to a previous due diligence statement. So if so basically you're not required to produce your own as an SME. So the operator must not import or export products from or to the EU where they are non-compliant, or where there is not a negligible risk that they are non-compliant. Or if it's not possible to do any due diligence on the products, then that's also a no-go as well. And you must create this information to be available to pass on to other operators and traders along your supply chain as well, just to make sure that the due diligence has been done and that everyone is aware of what it is. In principle, it might be able to excuse people further down the supply chain from doing their own due diligence if an operator has created a comprehensive statement, depending on where they fall within the supply chain. So it's a fairly onerous requirement on operators here, and also important is that information collected must be kept for at least 5 years. So going on to the obligations on traders, I've split this into SME traders and non-SME traders. Just because as a non-SME trader, so if you're a larger or medium-sized trader, then you need to meet the obligations that the operators have to meet. So those are the ones that we've just been through. Producing a due diligence statement and keeping the information. As an SME trader, you'll need to collect and maintain information on your buyers, your suppliers, and the reference numbers of any of the due diligence statements that have been associated with the products that have already been completed by an operator further along the chain. As with the operators, you would also need to keep the information for at least 5 years and have that information ready to provide to the competent authorities. So moving on, you would also potentially be able to delegate the submission of the due diligence statement to an authorized representative if that made things easier, but you would still be responsible for the product's compliance. You can't pass that off to anybody else. So a little bit more information on obligations, and I'm going to go through these a little bit more slowly. So any companies planning on trading relevant products on the EU market will be required to collect precise geographical information. Now, this is one of the more onerous requirements because it includes coordinates on the farmland where the commodities have been grown, the supplier details, and any verifiable information that the commodities are deforestation free. This is so that commodities can be checked, that they originate from land that hasn't been obtained through conversion of natural forests or other natural ecosystems. It doesn't actually matter what the cause of the deforestation is. And for bulk products, so for things like soy and palm oil, all of the plots of land in a shipment must be geolocated. So this is going to be quite a large undertaking for companies that fall under the scope of having to provide this major due diligence statement. You would be able to sort of add up the traceability information along the supply chain. So for instance, a shipment of soy that has been sourced in several hundred plots of land in several countries would need to be associated with a due diligence statement that includes all of the relevant countries of production and geolocation information for every single plot of land that's contributed to the shipment. So as I said before, that is quite an onerous one. Next, would also need to confirm and verify that commodities are produced in line with the relevant legislation of the country of production. So this includes things like laws on human rights, anti-bribery laws, land use laws, labour rights, and tax laws as well. So you'd need to comply with everything that's pre-existing in addition to this new regulation. Would also need to carry out risk assessments to make sure that or to determine whether or not there is a risk that commodities are non-compliant. We'll go into the sort of risk categories in a bit, but if you're able to establish that you're only sourcing from lower risk countries, then you wouldn't need to continue that risk assessment and go into the kind of depths of deforestation analysis. It would just be the risk mitigation that was required on that point. And And this is the next thing. So carrying out audits and independent surveys to make sure that there isn't a risk or is only a negligible risk that the commodities are not compliant. And then finally, establish and maintain due diligence systems, reporting and record keeping. And that's really, really important. I think really for anybody who is involved at any stage of the process, sort of irrespective of size, it's important that you know that this is a requirement for some people amongst the supply chain. So having all of that information to hand early on and knowing where it is.
Just listening to it, basically, while I carry on working.
And knowing where it is, and making sure that staff also are aware of the need to keep it updated and accurate is also really important. So this slide is basically a bit more information on exactly what you'll need to be including in that due diligence statement, or what will need to be included. So this is good information to kind of to make sure you know about, regardless of whether or not you're actually going to have to produce the statement. So the signed statement must also be submitted before the product is placed on the EU market. So that's really important that that you make sure all of this information is in hand before that product gets placed on the market. So this is, if you kind of read through, description of product, operator's name, that HS system code that we were speaking about earlier, the country of production and the geolocation of the plots of land where the commodities were produced, as well as the date or time range of production. The date and time range of production is quite important, because we want to make sure that deforestation hasn't happened since 2020. That was an important date. And then that statement needs to be signed, confirming that the due diligence was performed, and that no negligible risk was found, or any risk at all. Operators must introduce a due diligence system that will allow you to do the above. It's really important. That also there's an annual review of the system as well, just to make sure that nothing has changed, because the onus will be on the operators to update the sort of relevant bodies if any of those commodities they sort of find later on that they were incorrect in their initial due diligence, or if something's changed since they did their due diligence. There needs to be a kind of regular updating of systems to take into account. So it's not good enough to sort of just do it once. You do need to be keeping track of this as time goes forwards. For non-SME operators, there will also be a place online to publish the report, although this hasn't been released yet by the Commission. So that's a watch this space point. So going on to the checks and the sanctions, operators and non-SME traders, the checks will apply equally. So there will be an examination of the company's due diligence system and how it's been implementing it. The documents will need to be provided so that compliance can be proved. The authorities can also come in and conduct on-the-ground investigations and use sort of DNA analysis or satellite images to do their sort of particular analysis in order to gather that bit more information. SME traders, the checks will normally only cover examination of documents, but if it's considered higher risk, then that could be extended to spot checks and field audits. Where there is a high risk of non-compliance, immediate action can be taken. So So that's it's worth noting that there might not be much warning. Customs agencies can check that shipments have been properly accompanied by due diligence statements and can take action against non-compliant products. So that's another sort of stage in the process where you'll come under scrutiny. So there will be annual checks to cover different proportions depending on the origin of the commodities. So it's not that every single shipment coming through will be checked. You can see on the slide here that there are different percentages depending on the risk of the origin of the commodities. And this is what I referred to before, that the Commission hasn't actually released the paper saying which areas are considered low, medium or high. But we hope that will come out soon, certainly before the end of the year. But depending on the risk level, the percentage is slightly different. So obviously, the lower the risk, the fewer relevant products or operators are checked, and then that increases as the risk increases. So competent authorities will require operators to take appropriate and proportionate corrective action to rectify any non-compliance. So this includes rectification, so rectifying any formal non-compliance, stopping the product, so actually preventing the relevant product from being placed or made available on the EU market, withdrawal or recall, so withdrawing the relevant product immediately with no warning. That's gone. They'll then donate the relevant product to a charitable or public interest purposes, or they'll dispose of the product in line with the EU rules on waste management. So essentially, if that product gets stopped and can't prove that it's compliant, that shipment is gone. So that is quite a strict corrective action there. The infringing company should also make sure that they address any shortcomings in the due diligence system that sort of allowed the non-compliance as well, because you certainly don't want that to be happening on multiple occasions. So going on to the penalties. So first of all, and this is quite major, fines for non-compliance will be up to 4% of a company's EU turnover. The fines will be proportionate to the environmental damage, so it won't necessarily mean that it's going to be an immediate 4% fine, but depending on how much environmental damage there would have been and the value of the items, it will sort of go on a sliding scale up to the 4% benchmark. It wouldn't be more than that, but that is quite substantial if you do meet that 4%. Confiscation of the relevant commodities, so as we mentioned before, or of the revenue gained from them. There would also be a temporary exclusion from public procurement processes and access to public funding for a maximum of 12 months. So you can see this is sort of adding up to quite extreme penalties. And also a temporary prohibition from dealing in the EU in the relevant commodities for serious or repeated infringements. Or a prohibition from using the simplified due diligence process that I mentioned earlier, that's just available to commodities produced in low risk areas. So if you had been in a low risk area and you were using the simplified due diligence process but hadn't done it properly, or hadn't done it at all, then you would have to do the full due diligence if this was one of the penalties that was given. So it's pretty important, as you can see by these penalties, that kind of get your head around the different requirements. There'll be a fair risk of damaging reputation because of non-compliance, with ESG measures being pretty high on the agenda of lots of consumers. So it's definitely worth taking these into account. And also, if it's not directly you that would be penalised, then if it was somebody along the supply chain, that's also something to consider, how that would affect your business. So you might have heard me mention competent authorities a few times. So this is the enforcement mechanism, basically. So at member state level, so in each of the different parts of the EU, they have designated different authorities to enforce the regulation. And they can conduct these checks in principle without warning on operators and traders established within their particular territory. That said, it's likely going to take a fair bit of time for the member states to organise and implement this effectively. So it was quite a short time frame anyway, going from sort of June last year to December this year, or June in 2025. And depending on the funding of the different member states, it might be that enforcement or guidance will be better in some areas. So that's also something to take into account, that it won't necessarily be exactly the same in different countries within the EU. Private parties might also be able to submit concerns to operators and to competent authorities. So it wouldn't just be the competent authorities and at customs. It might be other private individuals that have an idea that there might be non-compliance going on as well. So preparing for the regulation, I've just got some considerations here, and these are things that you might want to just have a think about when you're assessing how this regulation is going to affect you. So first things first is to determine your own scope and whether or not you're actually caught by the regulation at all. So are your products in scope? What is your role as an operator or as a trader? Are you an SME? Are you not an SME? So small, medium, large, micro enterprise. Also important to gather the data for products in scope and inform suppliers about any upcoming requirements. Assess the impact. So are your suppliers likely to be affected? Sourcing raw material might be more challenging, and this will affect prices. So thinking about things like coffee and cocoa, both of these, like a high proportion, will cross an EU border, and non-compliant shipments will need to find other markets. So it might be that you end up trading at a significant discount if you're not compliant in coffee or in cocoa. Are you able to prioritize your goods based on their importance to your business? Some areas will be affected to a greater degree. So even if you're not directly caught by the EUDR, you might still need to be familiar with the requirements so that you can provide that necessary information to customers elsewhere in the supply chain. Also important to create and maintain a due diligence process, which I touched on a bit earlier. But this will come with costs and potentially additional training requirements for staff. So that's also something to consider, whether or not you have the appropriate staff and software. I know some companies that are actually hiring people that this is going to be their full-time job, but obviously that depends on the extent that you think that you're going to be caught by the regulation. It would be good to screen your current and potentially future suppliers. The easiest way to kind of mitigate is make sure that perhaps your suppliers are not coming from the EU. But in any case, a supplier code of conduct should be drawn up so that at least you can have some sort of security or certainty that they're aware of the requirements and that they've done their due diligence, or it might be that you want them to be specifying geolocations when you're drawing up contracts. Do your existing standard form contracts need revising to take into account anything that we've discussed today? That's also something to consider, whether or not you want any additional clauses in there just to provide any additional protection. And finally, if you have any bespoke sale contracts, consider whether there are any special provisions or express provisions that you can incorporate. It's good to consider that it will benefit both parties. Obviously, as a lawyer, we like clarity, and having clarity right from the beginning is a brilliant way to avoid confusion later down the line. So some additional strategies, and these are just examples of potential ways that you might want to go about preparing for the regulation. So undertake a certain amount of due diligence with your current suppliers, just so that you can get a good understanding of who is involved in what. Monitor EU guidance. So the list of high-risk countries, as I said before, is still yet to be published, and the regulation will be reviewed every 5 years. So it's good to keep abreast of what's going on in the years to come. A potential strategy could be that you just reduce supply to the EU altogether, so that you don't have to comply with all of these requirements now. With that in mind, there is going to be some sort of preparation that you will need to do as new nations get involved in similar regulations. Sourcing from low risk areas limits the sort of onerous nature of what you need to provide. So I mentioned the simplified due diligence statement a bit earlier, that would be available if you were sourcing from low risk areas. Also, low risk areas get checked more infrequently at customs as well. You could just substitute other commodities that don't fall under the regulation, and then adapt your supply base so that you're not in the short term going to be hit by the requirements. I've put some useful websites on here as well, and I'll be, as I said before, I'll be sending around the slide. It's also probably worth just mentioning quickly that about the regulations in the UK, which is a time for another presentation, and not immediately, because the UK hasn't actually announced exactly what their version is going to look like. It's going to be called the Forest Risk Commodities Regime, and there will be some similar commodities that will be included, but it's not entirely the same as the EU DR. And unlike the EU regime, the list doesn't include coffee, and but might include maize. So that's just a slight difference. But that said, the EU DR won't be contradictory to the UK regulations when they come in, and it's unlikely to be quite a few years before that happens. But we don't know exactly what it's going to look like. So preparing early for the EU DR will definitely set you in very good stead for when UK enforces its version. And early preparation is always the best way to go. So with that, it's time for any questions.
Thank you, Ella. Yeah, there's a lot to consider, and not a great timescale either to put those into place. So yeah, just if anybody's got any questions for Ella while we're on the call, please do unmute yourself.
Well, can I jump in with one just to perhaps kick things off? I know a few people joined a little bit late, Ella, so I just wonder if it's worth just clarifying if, for example, you're buying your chocolate, let's say, from a major chocolate supplier, and that then goes into your product, whose responsibility is it to check the place of supply? Can you trust the documentation that's given to you by the person that's supplying it to you, or are you liable if they're not doing it properly? How does that kind of thing work?
So I think on the sort of first of all, it's important that that you know exactly where everything's coming from. It will be on the person that is supplying it to you to make sure that all of their due diligence is in place. So this is why I mentioned about perhaps coming up with a supplier code of conduct, because that would just give that extra level of protection in writing, that the supplier has done all of their due diligence, because you would need to reference the due diligence statement in a statement that you would be making, but wouldn't actually have to do the in-depth due diligence yourself.
So you could quote their due diligence statement reference on your, yeah, okay, good.
Just a couple of questions in the chat box from Suma. Stephanie at Suma, she's just asking about the HS codes annex, which I believe you linked to in the presentation. So yeah, we'll be sending the presentation around with that link so you can look at those HS codes. And then from Alice, she's asking, is there any statement that needs to be included on actual
product packaging?
Yeah.
No. So there's going to this is another area that hasn't been released yet by the by the Commission, but there's going to be a place online where you can upload the statement to. You'll need to include the sort of reference document with the shipment, but you won't actually need to include on the actual packaging. So there won't, under this regulation, there isn't a requirement for any packaging to be changed or any labels to be put on packaging either.
Okay, great, thank you. Yeah, so with all the things that haven't been released yet, do you think there might be a possibility of this being delayed again into coming into place, or?
I think that's unlikely. I think if it was going to be delayed again, it probably would have already happened. There's been quite a lot of noise around it, but from what I'm sort of hearing, the Commission have already released a statement saying that it won't be delayed.
Right.
I mean, whether or not it is, I think it's less likely, given that they've released that statement. But I think it's going to be something that will take a long time for people to get in gear anyway. So the further and further you push, it's just like, how long is a piece of string? I think they just have to set a date, and everyone has to basically, unfortunately or fortunately for the environment, get on with it.
Yeah. Okay, well, thank you very much. I think anybody got any?
Hold on, I've got one more. Ella,
yes.
Will this apply to goods going in transit through Europe? Are they likely to impose it at the border posts, or?
So anything that enters into the EU market, so if it goes through, then it's something that will be caught under the regulations.
Even though it's not ending up in Europe, it'll be going to, I'm going to say, Ukraine or Azerbaijan or whatever.
Yeah, using the EU market as a sort of through route, it would also fall under the requirements.
Right. Okay. Thank you.
Anyone else?
Just one thing just related to that, I know someone else asked me, is you said that each country has a registry portal or something in due course. So if you are shipping, do you only have to put it on the UK one and that becomes your point of reference, or do you have to submit it to an EU one or an individual country one within the EU? Do you have any insights on that?
So I believe there's just going to be sort of one main place that the Commission is going to set up, and then you submit it there. There aren't going to, I don't think at the moment it's going to be different ones for each individual different member state, but I'm not sure of that yet. I think it because of the different sort of finances of the different member states. I'd hope that there was one central place, because I think, you know, we there needs to be some regularity to it all, but at this stage we don't know.
Yeah, and I think it's worth noting, we will keep members up to date when things do change. We'll let you know, and we'll put that information out to all members. So yeah, you will be notified when things are happening online and that kind of thing. So yeah, like I said, we'll be sending out the slides and the recording. So please do share with any colleagues that this might affect, any suppliers, etc. And thank you, Ella, for joining us this morning. We do have our next export operations webinar is on the 16th of July. This one is for FDEA members only, and it will be a workshop format online looking at the challenges faced by exporters when sending product to Spain. So if that's of interest for you, please do go onto the membership portal and register yourself for that as well. Okay, thank you very much for joining us this morning, and have a great day.
Thank you.